Feel electric, baby. So electric, baby. Wanna let you know, let you know. Think I'm ready, baby. Think I'm ready now. Electricity.
Falling into you. Where my mic at? Hey, hi guys, it's Majesty Bianca here again with the Financial Drive-Thru, and it's good to be back. This is actually going to be my first video this year, and that kind of sucks, but I'm going to try and ease into it. So basically, for those of you who are new here on the Financial Drive-Thru, what we do is we go through up-to-date news, information, and pretty much everything in this space to try and give you an edge in the cryptocurrency and financial markets. So if you're into cryptocurrencies, the forex markets, and you're interested in this kind of content, I'd love to have you subscribe to the channel. And that said, let's drive through. Okay, as we start the drive through, we're going to take a quick look at coin market cap. The total market capitalization is just over $114.6 billion, and BTC dominance is at 53.4%. So that's a rise from yesterday, where it was at 113 billion. And not much is going on in the markets. Most of the top currencies are consolidating sideways, as you can see. So, but there is some green in the market. So, I mean, that is, I can't say it's good. I mean, we're only looking at 1% gains, and Litecoin seems to have a 5% gain. So if we look at the biggest winners, we see Holo, Everest, Aurora. I mean, there's a bunch of coins I don't really know here. Electronium is up actually by 7.14%, but look at the trading volume. I mean, only a few people are trading this right now, so there's not much going on. I mean, check this out. Everest actually has a trading volume of 38,943. So I bet you that's like two people tops. Well, maybe three, but you go figure. Looking over the biggest losers, we see Revain, Project Pi, Crypto.com Chain, Wave, Steam, Zilliqa. I mean, there's a bunch of them over here. So I personally don't like to dwell on price anymore, especially since we've been in such a long, drawn-out bear market. So let's just get straight into the news, shall we? Top story for today happens to be this. The VanEck SolidX Bitcoin ETF has been refiled by the CBOE with the SEC a week after it was withdrawn. So getting straight into the news, the previous application would have received the final decision sometime late February or early March, and it was withdrawn by the CBOE last time based on the government shutdown thanks to Trump. Jan VanEck had said that technically, as you know, the SEC is affected by the shutdown, and they were engaged in discussion with the SEC about Bitcoin-related issues, custody, market manipulation, prices, and all that had to stop. And so he added that rather than slip through the cracks, they decided to pull the application and we will refile and re-engage in the discussion when the SEC gets going again. Now, as we know, there's a temporary lift on the shutdown. And the interesting thing is that the ETF that they just refiled is not the exact same one. It's apparently 10 pages longer, and they've made a couple of changes to try and make this one pass. Here it says that with the new application, the CBOE has sought to address concerns such as market volatility, liquidity, and price manipulations, factors that have contributed to the SEC turning down previous ETFs in the past. I looked into a couple of different articles still on the same subject to try and grasp what the revisions entailed, because I know not everybody is going to read that. A deeper look into the revisions revealed that the trust would invest only in Bitcoin this time, and the trust would also be limited to issuing baskets in exchange for cash or Bitcoin, purchasing Bitcoin from various exchanges and in OTC transactions, selling Bitcoin or transferring Bitcoin at the sponsor's discretion, to pay the management fee as necessary to cover the sponsor's management fee, Bitcoin insurance fee, trust principals, employee salaries, expenses, and what have you. Now, interestingly, VanEck had opined that the two Bitcoin futures that are currently in the market belong to the CBOE and the CME, and prices of the ETFs will be backed by those two organizations. Now, these are regulated organizations, so I'm interested to know what you think about this. There was one article I found quite interesting, though. It brought a different spin to things. It's titled, "The Bitcoin ETF Now Back on the Table, Schrodinger's Cat, or Will the SEC Relent?" Now, this article says that this is the 5th year of an attempt to get an ETF in the United States, with the application filed in 2013. Now, it took the SEC 4 years to respond, and I think that's quite a long time to actually leave things hanging. But then again, Bitcoin wasn't exactly taken as seriously as it's being taken today. Now, we still want the ETFs to come because everybody is of the opinion that this is going to bring institutional investors into the markets. Please bear in mind that the ETFs are not for us retail investors. We're probably not even going to be able to touch these things. It's going to be for the whales, the big money, and the organizations to come in and handle. But the good thing is that it's going to bring liquidity into the market. It's going to bring a lot of flow. But he came up with a very interesting political argument. Now, I'm one to shy away from politics most of the time, but I found it quite interesting. Now, the writer is looking at the year 2020 as the economy election, the year that brings the American economy to bear. And on that front, he says the debut of the most innovative technology on the world's biggest stock market may very well be a catalyst of optimism for proud America. Now, the SEC so far hasn't approved any ETFs because they claim that there isn't enough surveillance of traders to determine when there might be price manipulation. And I mean, we know that there's a lot of price manipulation in crypto. But right now, this writer is actually of the opinion that this no longer holds any water. He says, CME's Bitcoin futures alone handle at least 3 times Coinbase trading volumes. And Coinbase is big. Coinbase is out there. Now, in addition, some 7 crypto exchanges have entered a surveillance agreement with Nasdaq. He goes on to say that in South Korea, regulators have recently taken action against an exchange CEO that they claim allowed for price manipulation. So, I mean, right now, people are actually clamping down on these things. And so he doesn't feel that in 2019, this argument still holds. So the question I have for you is this going to be the year for an ETF, or are they going to keep stringing us along? Because his argument is the longer they string us on, the more we see this as a political move. And so if he's right, he's saying that the SEC can give very little objective reasons to prevent new crypto products from entering the market. I'm doing the Trump hand, the Trump. So, I mean, this does seem like something that I want us to talk about. I really want to see what you guys have to say in the comments. Let me know your thoughts. It's a very interesting angle. I had never considered it a political move. And so, yes, for those of you who've been truly interested in this and who've been hanging on, waiting to find out, let me know what you think in the comments. I mean, we can very well agree that, yes, there's a lot of market manipulation. We see it every day. And I mean, the headlines. Okay, hold on. Take a look at this. Bitcoin fails to reach the masses due to ICO scams, lack of public trust, and all, says experts, right? And at a glance, we can already agree with this because, let's be honest, there's so much that's gone wrong. Everybody, bag holders are crying. We've laughed through the memes, we've cried through the losses. Everybody who's been in crypto for at least the last 2 years can say they've experienced opening up their portfolios and seeing their money disappear. It's wow, much wow. And I mean, there's so much to be fearful about, if we're being honest. I saw this headline, hackers still exploit Cryptopia. Personally, I do not give a damn about Cryptopia. The only thing that got me on it was, I think it was Electroneum. The first time I got into Electroneum, that was where I had to get some. Yeah, I think it was Electroneum. That was actually where I had to get some. And normally I wouldn't pay attention to any of this, but then I read through it, and it's actually ridiculous sums, okay? Now, they go on to say that in a blog post, blockchain data analytics firm Elementus says Cryptopia's hacker, after staying low for a few days, he gave them time to chill, has stolen an additional 1,675 Ether from 17,000 wallets. Oh my God, 17,000 wallets, and that is approximated amount worth about $181,000. Kudos. I mean, people are working. This is people. Whoa. They went on to say it looked like Cryptopia might have been trying to move cryptocurrencies to a secure state with the remaining user funds, but it was found out that the Ether was being sent to an Ethereum address that has been used by the hacker in the past as well. This guy does not quit. Now, the firm has said that the hacker has the private keys and has the ability to withdraw funds from any Cryptopia wallet at his will and wish. I'm going to say that again. He can withdraw funds from any Cryptopia wallet at his will and wish. It's like waking up in the morning and deciding you want $100,000 and then just getting it. So now they've said that wallets were still being topped up, which suggested that not all users were aware of the breach. And so I think that that's the main reason why I'm talking about this. Because in case you or anyone you know out there that's still using Cryptopia, I think you guys should be on alert right now. People are still putting money into Cryptopia and somebody else is just transferring that stuff out. Now, most of the funds have been coming from mining pools, and it looks like the payments are being sent on behalf of miners who have opted to receive their rewards automatically with the help of a direct deposit. So they may have forgotten about this, and a lot of people actually just have accounts where money is actually moving through this whole direct deposit system. People need to be woke. So just last week, Elementus again had published an analysis which indicated that about a whopping $16 million worth of Ether and ERC20 tokens could have been stolen. Well, emphasis on could have, so because that's a lot of money. So could have been stolen from Cryptopia wallets, and the exchange hasn't released any information regarding the amount that has been lost till date. They rather went offline on the 15th of January and stated the reason as a major hack which resulted in significant losses for them. So since the shutdown, New Zealand police has been investigating this case and stated they've kept an open mind as to pin down all possibilities. I don't know what an open mind will do in this situation. I think people should just go withdraw their money and let's hope for the best. We are sick. I'm personally sick of seeing exchanges go down like this. It's pretty bad because a lot of people don't know better and a lot of people are actually scared of holding their private keys. I think if you're scared of handling your own money, you really shouldn't be in crypto, but that is a story for another day. You can check out my video on how to handle cryptocurrencies safely and securely. It's popping up on the screen above me. And I mean, seriously, we all need to do research and be vigilant. You can't leave your money lying around like that. This is just sad. So these are kind of the reasons I think why regulations are coming down this hard on us, because if all this kind of stuff is happening and investor security is paramount, we need to be better. We need to actually step up in this whole thing. So rather than more bleak news, I saw this one and I thought this was interesting. This came out yesterday. I don't know why it's taking so long to load. Coinbase killer. Binance adds direct debit and credit card purchases. So that's great. I'm a huge fan of Binance. This is one of the better exchanges in my opinion. I believe at least 99% of the people, okay, that's steep. I believe at least 95% of the people watching this video will agree with me. And Binance is, they say, the world's largest cryptocurrency exchange, and they announced on Thursday that investors can now directly purchase major cryptocurrencies using Visa and MasterCard debits and credit cards. And there's a tweet from Binance over here that says they've enabled those payments. You can check it out by logging into your Binance account or opening one. Again, there's a link in the details section if you don't have a Binance account. I'd encourage you to use my link. Now, according to the announcement, they say users on Binance can now use Visa or MasterCard to buy Bitcoin, Ethereum, Litecoin, and XRP, good old XRP, through a partnership with Simplex. That's a leading payment processing company. Now, if Simplex sounds familiar, that's because they provided direct card purchase functionality for major platforms including Abra and Changely. Now, Binance indicates that the average transaction doing this will take between 10 to 30 minutes, and the exchange will charge 3.5% or $10 per transaction based on whichever is higher. I think that's fair. A lot of these credit card charges tend to be pretty high, so depending on what you're dealing with, if you're going to be buying cryptocurrencies with fiat, I mean, I think $10 is fair. That's my opinion again. And at this point, I should have put it at the beginning of the video, but everything that I say on this channel is my opinion. So yeah, now that that's out of the way, let's continue. Changpeng Zhao, popularly known as CZ, he's the Binance CEO, he says, the crypto industry is still in its early stages and most of the world's money is still in fiat. So building fiat gateways is what we need now to grow the ecosystem, increase adoption, and introduce crypto to more users. I strongly agree with this and I'm so for this move. It is crazy. Now, prior to this, Coinbase has been the only real fiat on-ramp option. People have been using Coinbase for a while, and so that explains the headline. Now, because Binance is now notably more popular than Coinbase, it makes sense that people would look at this as something to slash the competition down all the way. Now, Coinbase recently launched an affiliate program that will reward websites and blogs for referring new users, which is it's nice. And the move, they say, suggests that Coinbase is focused on drumming up more users as it attempts to combat the 13-month crypto bear market. Hasn't been longer than that. So Binance adding debit and credit card functionality could ultimately outweigh Coinbase's new affiliate program. Let me know what you think. Comment section, you know what to do. Now, it's important to note that many banks view credit card purchases on digital asset exchanges as margin trading and treat it as a cash advance with a higher APR. Now, while others ban these purchases outright, you just have to keep this in mind. It happens. It sucks, but it happens. Now, the likely impending hike in crypto purchase activity could draw additional scrutiny. Again, more scrutiny, regulations, the cycle continues. Now, depending on where you are in the world, you also want to consider the tax implications for using your credit cards to buy cryptocurrencies. And I mean, this is just stuff that I think everybody should look into. Now, moving on to the next article, I found this headline particularly interesting because of a fellow YouTuber that I watch, Crypto Daily. Researchers find exploits in 26 proof-of-stake coins, Cardano unaffected. Now, Crypto Daily is a huge fan of Cardano. If you watch his videos, you probably know this. He's shouting out to them in practically every video now. I see you, man. A study undertaken by a group of student researchers has found a vulnerability within proof-of-stake cryptocurrencies which could affect up to 26 coins.
Unless it's ADA, of course.
Now, the vulnerability, dubbed fake stake, allows a malicious actor to crash a network node running POS without having a majority stake, hence the name. Now, they've listed out a couple coins here that are possibly going to be affected, and they've put the status on the side. So I definitely would link all these things in the detail section of the video, so you're welcome to check it out. So far, coins that I'm personally interested in, I see Qtum, Neblio, what else? Potcoin. Yeah, I'm gonna throw a video I did about Potcoin and weed cryptos in general. It's popping up at the top of the screen right now, so definitely check it out. Hemp coin, again, yes, I mean, so I did go for these coins because they were stake coins. And so this is actually a subject I'm going to look into further because staking was the main reason I jumped on some of these coins. So yeah. Now, here they say Cardano appears to be invulnerable to these types of attacks due to the fact that the project team built ADA from the ground up rather than simply using an existing model. Way to go, guys. Way to go. I actually didn't know they built this from scratch, so I mean, you learn every day, and sure. Does this affect the price directly? But it's always good to know that you're holding a good coin, I guess. And with that, I want to say thank you to everyone who's stuck through to the end of this video. I'm going to leave you with behind the scenes footage of me pumping myself up to make this video because it's really been hard coming out of hiatus. So thank you. If you like this kind of content, you know what to do. Smash the like button, hit the subscribe button, and stay tuned for more. I'll see you again on the next drive-through. Thank you.
Let you know.